As of January 10, 2026, the stock market is currently closed for the weekend. The most recent trading session for Novo Nordisk AS, trading under the ticker symbol NVO on the New York Stock Exchange, concluded on Friday, January 9, 2026 at 4 p.m. EST, with the stock finishing the day at $58.82. This represents a solid intraday gain of $1.48, or approximately 2.58% from the previous close. While most investors are looking at that daily green candle and feeling a sense of relief after the volatility of 2025, there is a much deeper story here that the surface numbers are not telling you. The market expectation right now is that Novo Nordisk is merely recovering from a brutal correction, but the reality is that we are witnessing a massive structural shift in how this company captures value in a post-injectable world. If you have been watching the headlines, you know that everyone is talking about the oral Wegovy pill launch. But here is the insight that isn't being fully priced in yet. The distribution partnership with Amazon Pharmacy and other major retail platforms is not just about convenience, it is a tactical move to bypass the supply chain bottlenecks that throttled the company throughout the previous year. While the crowd is focused on whether patients prefer a pill over a needle, the smart money is looking at the sheer volume scaling potential that an oral medication offers. Unlike the complex cold chain logistics required for injectables, pills move through the existing pharmaceutical infrastructure like any other high-volume commodity. This change alone could redefine the margin profile for Novo Nordisk as we move deeper into 2026, creating a situation where the reality of their delivery capacity significantly exceeds current analyst expectations. Establishing common ground is easy when you look at how NVO has been performing relative to the broader healthcare sector. Most people see Novo Nordisk as the original leader that lost its crown to Eli Lilly during the great weight loss race of 2024 and 2025. There's a general belief that because Lilly's Zepbound showed slightly higher efficacy in some trials, Novo Nordisk is now a second-tier play. I want to challenge that narrative directly. While Lilly might have the momentum in terms of clinical headlines, Novo Nordisk is currently trading at a valuation that looks incredibly attractive to anyone who understands long-term compounding. At roughly 15 to 17 times forward earnings, you're essentially getting a market-leading biotech giant at a price that traditionally belongs to a slow-growing legacy pharma firm. The market is treating Novo Nordisk like its best days are behind it, but when you look at the institutional activity from the last quarter, you see a different picture. We've seen large-scale accumulation from funds that typically look for value with a catalyst, and the 2026 pipeline is as heavy with catalysts as anything we have seen in years. Let's talk about the recent price action because it has been a wild ride. Over the last month, the stock has managed to claw back nearly 20% of its value, moving from the mid-40s into this current range near $59. This movement is being driven by a realization that the 2025 sell-off was likely an overreaction to temporary manufacturing hurdles. Trading volumes have stayed consistently above the 20-day average during this leg up, which suggests that this isn't just a retail-driven dead cat bounce. Instead, it feels like the start of a genuine trend reversal. We're seeing a lot of activity on the Interactive Brokers platform and among users of the SoFi trading platform, where younger, more aggressive investors are rotating back into healthcare names that offer both stability and explosive growth potential. The macroeconomic pressures of the last year, specifically the government-mandated price cuts for Medicare and Medicaid, have been the primary weight on NVO's shoulders. The market priced in the worst-case scenario for these negotiations, assuming that lower prices would lead to a permanent collapse in revenue. However, the reality of the pharmaceutical market is often driven by volume rather than just price. price per unit. As prices drop, the total addressable market expands exponentially. People who couldn't afford a $1,000 a month injection are now entering the market at a $500 price point for the oral version. This is the classic elasticity of demand that often surprises Wall Street. When the volume growth outpaces the price compression, you get a revenue beat that the models didn't see coming. Looking back at what the company actually does, it is important to remember that Novo Nordisk is not just a weight loss company. They have been the global leader in diabetes care for decades. Their business model is built on a massive recurring revenue base of insulin and GLP-1 treatments that provide the cash flow needed to fund their R&D. They have an incredibly high return on equity, often hovering above 70%, and a net margin that would make most tech companies jealous. Past performance shows a company that has consistently raised its dividend and managed its debt-to-equity ratio with extreme discipline. This fundamental strength is why many long-term investors use tools like Schwab Intelligent Portfolios or Fidelity Wealth Management to keep a steady hand on their NVO position even when the headlines get scary. As we look toward the future, the primary catalyst to watch is the clinical data for amycretin. This is the next-gen molecule that could potentially offer even better results than semaglutide. If the data readouts in the coming months stay positive, we could see a complete re-rating of the stock. The risk, of course, is that the competitive landscape is getting crowded, with new entries from companies like Viking Therapeutics and even some smaller biotech firms trying to get a piece of the pie. Novo Nordisk has to prove it can maintain its market share. But here is where the expectation versus reality gap comes back into play. The market expects a fragmented sector where no one wins big, but the reality of healthcare is that doctors prefer prescribing what they know works and what is covered by insurance. Novo Nordisk has the best feet-on-the-ground sales force and the deepest relationships with payers in the industry. For those of you managing your own individual brokerage accounts or using an online investment platform like the Robinhood app, it is crucial to stay focused on the long-term fundamentals rather than the daily noise. Whether you're into self-investing or you prefer the automated guidance of a robo-advisor, understanding the difference between a company's stock price and its actual value is what separates winners from losers. Novo Nordisk is a prime example of a company whose value proposition is currently being hidden by short-term sentiment. Before we continue, I want to hear from you. Comment below how many shares of Novo Nordisk stock you currently hold, or if you are waiting for a specific price target to enter. Engaging with the community helps us all see different perspectives on these market leaders. As we wrap this up, the central insight is clear. Novo Nordisk is in a transition from a niche, high-cost provider to a mass-market pharmaceutical powerhouse. The 2025 correction was the market's way of washing out the hype, leaving behind a much more reasonable valuation for a company that is still growing its earnings at a double-digit clip. Expectations were that the company would stall out due to competition and regulation, but the reality is that they are expanding their reach through new delivery methods and strategic partnerships that their competitors are still trying to figure out. If you are looking for investment help or exploring various investing sites to see where to park your capital, keep a close eye on the support levels near $55. As long as NVO stays above its 200-day simple moving average, the technical setup remains bullish. The combination of strong institutional buying, a stabilizing revenue outlook, and a massive new product launch in the Wegovy pill makes this one of the most interesting setups in the healthcare sector for the start of 2026. Whether you trade on a Fidelity trading platform or prefer the simplicity of Robinhood investments, the key is to look past the immediate fluctuations. In summary, we started by looking at a daily gain of 2.58% and ended by seeing a company poised to reclaim its position as the king of the metabolic health market. The contrast between the beaten-down narrative and the mass distribution reality is where the opportunity lies. Novo Nordisk has the cash, the products, and the manufacturing scale to outlast almost anyone in this space. While everyone else is chasing the next flashy AI stock, the smart move might just be the one that everyone thinks they've already missed. Would you like me to analyze the recent clinical data for amycretin or look into how the Amazon pharmacy partnership specifically impacts their projected 2026 revenue? Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.